Yo, what's good, boys? Welcome back to another video. Today, I'm going to be teaching y'all kind of what I talked about in the last video, but this video will save and make you a ton of money. A lot of you guys get really confused about my entry, and although I made a full video not only talking about daily bias, but talking about the first fair value gap theory, talking about the inefficiency of candle entries, like all that stuff, this video is going to really go into the exact entry. I felt like it was a little bit missing, although I talked about the concepts in the last video. I really want to make sure we understand this idea. Okay, so I'm gonna pause price action right here. I just threw this on some random time. Again, prerequisite, you got to watch that last video. It's going to be really important, really crucial to understanding this concept, because this is how I find my entry. Okay, so we know about daily bias, and we understand that we're moving from an equilibrium range to a previous daily high. Now, three things can happen at this daily high. A, we can consolidate on this daily high and not make a substantial move in any direction. What this means is that the liquidity resting here and the liquidity resting here is just enough to keep price pinned. Understand? A second alternative is we access a level of liquidity that fills enough orders that displaces price back down to the equilibrium of this relative swing, right? That's the general concept. Third and final thing is we have enough resting orders accumulated during the equilibrium distribution to the previous daily high distribution, as well as during the sweep of liquidity here and whatever else inversion event takes place that allows us to displace to the upside, right? Those are the three things that we can do. Go watch daily bias if that doesn't make sense to you. But in this particular instance, what we're looking at is where do we find our entry and how do we know that's our entry, right? Well, the way I look at it is the market is kind of like a three-phase. It's like a one-way highway, right? I can make money in really only one direction at a certain limit, right? So if you watch daily bias, you'll understand the only time I'm willing to take a trade is when we have an external liquidity reaction. Let's say price does something like this, right? Boop, 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 stops right here, and then drops to equilibrium. This is a trade, right? It has to access some amount of external liquidity. I'm not going to just short it just because there's one bearish candle, right? I need to go through the entire process of checking it out to see if there's external liquidity there. Because ultimately, let's just assume that there's external liquidity here that's sufficient enough to displace us. And we see a negative reaction here, right? And then it shoots back up again, right? You don't want to get induced into that. So what this model is going to help you do is realize when you're here. How do we know when we're here, right? Or in this current instance, how will we know if this move to the upside could be sustained? Okay, that's how we're going to know. And the first thing you have to understand is in a inefficient market state, you want to see delivery of bullish fair value gaps, bullish volume imbalances, even not overnight gaps, even gaps in price action are fine too, which are a little bit similar to fair value gaps. I have some content coming out about gaps eventually. Because again, a lot of people ask me a lot of questions about them. But this specifically is how do I know if price is going to displace? Well, the way I think about it is this. We are currently on the external liquidity, right? We're currently on the external liquidity. So we do have the ability to make a move here, right? As far as I really want to take this move is to this order block. It's another designated area of external liquidity, although we do have areas where we could sweep out these volume imbalances, right? And so what I understand is that we could totally stop the trade way earlier before this, but this is probably as far as I want to take it. Now, we're also retracing this fair value gap right now, so the first thing I'm going to do is figure out where that order block is so I can kind of anticipate. Now notice this is the first fair value gap outside of this external range of liquidity, right? So this fair value gap is actually really crucial, and so is this one too. This would now, really all of these are very difficult fair value gaps because notice liquidity sweep fair value gap, liquidity sweep fair value gap, breaker block, fair value gap, right? These are all crucial fair value gaps, so the upside move could be a little bit rough on this one, but we do have inefficiency to retrace, which does qualify for one of our first things, right? Looks like we're creating our order block right around here. So now what we have to look for is a base inefficiency to be validated in this direction in order to take a trade. Now notice something. Do you see how this candle right here, we talked about this in the last video, you see how this candle right here, unless it's a crazy move, would be very unlikely for us to make a bullish fair value gap, right? Because how the bullish fair value gap would form would be on that next candle with the wick, and the wick is just so high, it's just very unlikely. So what I like to do is I don't actually draw it out. That would be very weird, right? You guys wouldn't know what I'm doing. But what I like to do, I like to draw out or at least imagine a pointer, like it's like an actual pointer, pointing at this candle, saying this candle could be the candle that we get an inefficiency reaction from. The way I find my model is I wait for a base inefficiency to be generated off of a efficient candle. This is an efficient candle because it can't be retraced. So I want to see, does this create a bullish fair value gap, right? That's kind of what I want to see here. Does it create a bullish fair value gap? And notice it does create a bullish fair value gap, or at least it should create that inefficiency. It was retraced, so I'm not going to take my entry because the first inefficiency outside this range does not exist. It does not exist. But ultimately what I want to see is to make sure that this inefficient candle right here is able to support price action to the upside in inefficient delivery. And now we could have inefficient delivery here because the wick doesn't meet, right? We could see an inefficient delivery right there. We do not see an inefficient delivery, so I'm not rushing to take an entry. Whoops. So what I just saved you there is you taking an entry on something without having the prerequisite validation, right? We don't have prerequisite validation here because you see the breakout structure, you see the fair value gap, your brain fires, and then you get swept out, right? Not awesome, not awesome. Another feature that we need to be very aware of is the fact that we are now sweeping out a volume imbalance. So this easily could become an order block to the downside. Another feature I want to point out to you, we're going to put this pointer back here. Another feature I want to point out to you, we're going to put another pointer onto this candle right here. Why? It's because it can't create a fair value gap unless it's like super, super large. We'll wait for the fair value, or we'll wait for the next candle. See? No, we don't get that, right? So this is where our pointer goes to. Now what I want to ask myself is, does this create a bearish candle or a bearish fair value up to the downside, right? You have a bullish pointer and a bearish pointer. As a matter of fact, we'll even make it a little bit easier. We'll keep it on this. This is actually probably going to be the best way I can do it. I think you guys are going to like this. Hold on. Bearish pointer. Okay. And bullish pointer. And I don't actually say these things. Right? It's very unlikely I'll say, oh, there's a bullish pointer, a bearish pointer. No one knows what the fuck I'm talking about. I'm fucking nuts. To a lot of y'all, you see me, you're like, what the fuck is this? Fuck you mean you're making, like, what? How are you doing that? Right? And I understand that. So when I say shit like this that no one talks about, just shit I make up, shit I'm able to discover because I spend a disgusting amount of time on the charts, an unhealthy amount of time on the charts. I mean, this is just the language, the narrative I use. So in case you want to, it will never be mainstream. Most likely, but this is how I think about it. We have a bullish pointer and a bearish pointer where we could see do we see inefficient delivery past this pointer, or do we see inefficient delivery past that pointer? It's basically deciding where the delivery is going to start at, right? You'll have your efficient delivery, inefficient, 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 inefficient. That's what you want to see in an expansion to the upside, or a retracement to the downside. You want to see efficient pointer, inefficiency, 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 inefficiency down to an equilibrium. It's that simple. So now I want to wait for that delivery. We could have a fair value form here. Now notice in these ranges, you're gonna see it's like really, really challenging to figure out. It's gonna be really, really challenging to figure out which fair value gap is the fair value. Everything's being inverse, but that's the whole point. That's the whole point. So now you're gonna confuse even more of you. Notice, okay, that's our bearish pointer. I'm gonna move it to the side. Notice we have a bullish pointer now. This is an unretraceable fair value gap, right? This wick covers a lot of this range, so this is efficient as hell. This is what I call the bullish pointer, and the bearish pointer is right next to it, right? So we're waiting for one to deliver the inefficiency, and there's an inefficiency. Now, when do I delete the bearish or bullish pointer is when we get a break of structure over it, because it's just not going to be the inefficient candle, right? If you break structure over the bearish pointer, how are you going to deliver fair value gaps to the downside? You're going to wait for that next fair value gap that has to be retraced to get another bearish pointer, right? This pointer was created based off of a retracement, right? See? It's that simple. Let's see if we get the inefficient delivery. The answer is no. Okay? And so a lot of you guys are going to get upset, but unfortunately, we have to delete this bullish pointer because it just doesn't exist anymore. And actually, we can replace our bearish pointer with this guy right here. This is our new bearish pointer because it's the same thing, more or less, same area of price action. You're going to notice these pointers form around the same area, but this bearish pointer does describe the exact same thing here, right? You see how it's unable to retrace? Efficient candle, your bearish pointer. Here is a sweep of liquidity. So we're going to do our liquidity sweep test. Does this sweep of sell side liquidity induce a move to the upside and delete this bearish pointer? That's what I want to see happen. And it does happen, right? So there's that's actually awesome. I'm going to move our bearish pointer to the side now. It's been deleted. Matter of fact, I think I deleted the bullish pointer. Whoops. Okay. Hopefully this video will help clear that concept up a little bit, right? That efficient candle and why it's important. Now notice, we're still reacting to this bullish pointer. We still have this bullish pointer from well back here that I accidentally got rid of, right? We had another bullish pointer here, but we broke structure on that. The most local bullish pointer after that would be these two candles right here. Either of these are great bullish pointers, right? Now notice, interestingly enough, an order block looks to be forming on that. Our bearish pointer does not exist anymore, and hopefully we don't have it exist, right? We don't want it to exist, but our bullish pointers are still back here. The one that we found right here that broke a structure that couldn't be retraced has been closed, right? So we can't use that. You could, some people could still use it, but again, this makes more sense. Do you see how visually it makes more sense? These were both unretraceable candles, no fair value gap, efficient delivery. Now we're seeing an order block form on that. Now we want to see a fair value gap form in here for that delivery. And that looks like it was sustained. So this would be our first inefficiency in our direction. So now we have our inefficient delivery. Now we see a little bit of efficient delivery, right? It's super simple. We have an inefficiency to retrace. We don't have a bearish pointer yet. We don't have any bearish pointer, which is good. We don't want a bearish pointer to form. Here's a sweep. So we're going to do our buy side liquidity sweep test. Does this sweep right here induce a move to the downside? The answer is kind of. Does this sell side sweep induce a move to the upside? The answer is yes. Now we have a new bullish pointer. We don't want to keep making these, okay? Hopefully it's not confusing, but we don't want to keep having inefficient deliveries. We really don't. It's just not, or efficient deliveries. It's just not ideal. Now, you can have multiple pointers. It's the same thing. Right? I'm just pointing at this candle. That's all I'm doing. This is our bullish pointer right here. We have an additional bullish pointer here. So what do we want to see if we want to take this to the upside? We want to see inefficient delivery after this right here. If not, that could show signs of weakness of the expansion, or we need to consolidate a little bit more. I know this is super hyper-focused, but I'm just drawing you to the attention of where my eyes are going in a live market. That's what I'm looking at, right? Now this bullish pointer has been deleted, so I'm not worried about that. We're going to move that to the side. Now we actually don't have a bearish pointer either. That could be generating inefficiency. See it generating inefficiency. We don't have any other bearish pointer, which means we'd have to wait for a bearish pointer to then take a trade. And I know that's very confusing, but trust me, just stay with me. We're retracing this right here. This should create a bearish for value gap. Hopefully, if the upside move is valid, it will retrace that, and it looks like it did. There's no bullish pointer, no bearish pointer. There's nothing to worry about here. We have a volume imbalance right there. This would be actually, I'm not going to draw anything in there yet. There we go. So this looks to be another bullish pointer that's been mitigated. We've closed underneath of it. Bearish inefficiency. The upside move is starting to be a little bit weak. Now, we still have this bullish pointer from way back here, so we'll see how this reacts. Our first bearish inefficiency, it's been fully retraced. Another, okay, looks to be like we're getting close to potentially a pointer. Another bullish pointer. There it is. Another bullish pointer. But again, we can represent it with this one right here. It's the same thing. We just want to see inefficient delivery past this. Looks like we might get that right here too. There's our inefficient delivery, right? Do you see? There we go. Now we're seeing the inefficient delivery. Fair value gap. We also have an additional potential fair value gap right here, so we want to make sure that forms too. Otherwise, that move is cooked. Okay, so we now have that inefficient delivery right there as well. So this is solid. This doesn't look crazy in my opinion. Nothing I'm too interested in taking. Again, I'm just demonstrating how we can tell which side is going to win. This is all based off of this bullish pointer right here, right? That's all it's based off of. This is kind of where your order blocks are going to tap back into. You see? So we'll see what happens. This is just, again, conceptually, okay, it was end of day anyway, so it doesn't even matter. So it's kind of consolidated, but conceptually what I'm doing here is these represent where my eyes are going to and what I'm looking for, right? Displacement out of those ranges. Now this overnight could completely throw away this entire setup. Like this doesn't even matter anymore. We do have a bullish pointer right here, right? This would be a bullish pointer. And there's also a bearish pointer right here. Do you see? Both of these are perfectly valid. Kind of want to wait. We're chopping too much. I want to move away from this range, and then we can make that decision. So our bullish pointer, it's all based off this guy still back here. Looks like we might get an inefficiency too, as long as that sweep doesn't do a whole lot. And there we go. Do you see how we're seeing some inefficient delivery now? All based off of this efficient price action. Do you see? Efficient price action, tap back in, created our order block. First, fair value gap validation, breaks the structure, inefficiency, 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 potential inefficiency. How do we know when the move is over? When those inefficiencies start to clear up, and it can happen whenever. But where does your stop loss always go to? Underneath the base inefficiency, right? Now, if you see a pointer form against you, you're going to be sizing down. So obviously, we're not going to do any trade executions, but so far, so good. Now we have a bullish pointer there, right? That's that bullish pointer that generated a bearish inefficiency. This is a valid area. This is a very valid area. Fully retrace the inefficiency, so I would definitely be chilling. Bullish inefficiency, no pointer. Do you see how this worked? Do you see how we literally watched price develop and those bearish pointers fail, and we created that order block off the bullish pointer? That's the whole concept. We might keep it at that. We'll do one more setup just to keep it really simple. Pointer here, right? We have a potential pointer. We'll see what happens with this price delivery. I'll even bring back our old pointers. Okay, move this back up here. It's really helpful for determining when that move is going to end as well. Like, as valid as it is to find your entry, you also want to make sure you don't get retraced immediately, right? We saw how the price developed. Let's say we were in the trade for whatever reason. Where do we exit? Well, definitely going to trim some cons here because we're seeing some formations of pointers, right? That's efficient delivery. We're seeing efficient delivery, and I don't like efficient delivery. This was fine. That's perfectly fine. I'm not mad about that at all because we saw inefficient delivery right after that. It's fine if it gets retraced too. We just need to see not perfect, but we need to see things that are of character of inefficient delivery. And that's perfectly of character, right? As long as it's breaking structure to the upside and creating inefficiencies. At the end of the day, that's all I really care about. Potential bullish inefficiency here, that's being retraced. I'm trimming off of that because we have pointers here showing efforts of efficiency, showing like non-inefficient price action, non-expansive price action. Although it could completely run from here, I'm not willing to risk it. I'm trimming in this area for sure. Does this sweep of liquidity induce a move to the downside? The answer is no. Whatever contracts I have, my stop loss is getting pretty narrow, probably somewhere in here. And notice this bearish pointer is failing, and we actually are creating we're creating a bullish pointer in here now, right? You see how I'd be looking at this candle right here to deliver a bullish inefficiency. Otherwise, we're out. There's potentially a bullish inefficiency. The algo is taking a trade here. Not surprised why. I believe it was actually unable to take this trade because it was already in a trade. It would have taken this trade if it wasn't. Okay, for sure. I'm 100% guaranteed of that. This is literally just the Macre method. But yes, so we're looking at this candle right here. Gotta wait for that retrace, break of structure, and you're chilling. Bearish pointer, right? That bearish pointer did not create a bearish inefficiency. That's incredibly bullish. Now we want to see bullish inefficiency delivery, and then we be set. Move this out the way. Actually, we'll put these underneath of us so we can just access them. There we go. There's a sweep. Not really seeing what I need. There's a bullish pointer. That bullish pointer created an inefficiency. Definitely trimming the whatever contracts we had for sure. Not really seeing. It's just too much consolidation. I would just prefer a re-entry, obviously, if we were to take something like this. There's another bullish pointer not creating bullish inefficiency. Do you see how it completely failed? You see how over time, as you retest those pointers, like where was the first one? Pointer failed. Pointer failed, right? We had multiple events like this happen. I swear there was another one. Am I tripping? This right here, this right here, this right here, all of it failing, right? Showing low efforts to the upside. Efficient delivery, you'd agree, efficient delivery. Now, is there a way to have taken a short off of this? Is there a way? The answer is no, because we have a bearish pointer right here. That's a bearish pointer right there. That's a bearish, that's a bearish pointer right there, right? This is a bearish candle that cannot be retraced based on this candle right here. So that's a bearish candle pointer that we would want to see inefficient delivery from, and we see inefficient delivery. Now watch, always wait in the retrace, always wait in the retrace. Retrace is bearish and potentially could have another inefficiency. You always got to be careful. There were no other bullish pointers over here that we have to worry about, thank God. But this is going to be potentially a way to figure out, okay, can we now take a trade to the downside? We saw the delivery to the upside. Can we take a trade to the downside? Let me think about this. Hold on. All right. Well, we'll do delivery from this order block to these highs. Okay. We're getting close to that structural EQ. Obviously, this is a much larger equilibrium that we have to, be cautious about, but algo's getting pretty close to EQ anyways, so it kind of knows what to do in these situations. So now we want to wait for that retrace. How do we determine if this could be an additional move to the upside or the downside based on the retrace? Now, I'm not entering on any of this stuff. I don't care. I don't care because I don't want to be swept. Go watch the video on it. Go watch the video. I promise you, it'll save you a lot of money. Bullish candle here, bullish order block potentially that could create an inefficiency. Now again, we have a no bullish pointer because we broke over the high of the wick, so this could be retraced. There's the fair value gap that gets retraced. So that's why I would not have taken an entry on that. Do we see? Very simple. This is a bullish pointer. It cannot be retraced unless it moves very, very far. So we'd want to see a bullish inefficiency out of this, which we do not see. We see an additional bullish pointer. Although this is actually prime example of something that could be good. We broke structure on the first fair value gap or the second fair value gap outside of the order block. This could be good. We want to see bullish inefficiency form. We're not seeing that. There's a sweep. Does that sweep create a move to the upside? The answer is no. We actually now bring in a bearish pointer that actually breaks structure over our bullish pointer. So I really only care about the bearish move at this point. Now we just want to see, again, there's another bullish pointer here. Now we have a bullish pointer here. I know it's so confusing. I know it's like, what the fuck am I looking at? Bullish pointer here, right? Can't be retraced. Does that create an inefficiency to the upside? The answer is no. We create a fair value gap, and potentially we have the ability to take a trade here now. Although we're very close to that EQ, this is potentially a place where you can take trades with that bearish inefficiency. Delivery down to EQ range, right? See if we get that inefficiency. This is a bullish pointer. Does that bullish pointer create a bearish or bullish inefficiency? The answer is no. A buy side sweep, does that move to the downside? That's my next question. The answer is yes. Okay, so there's that order block. There's that fair value gap. And the bearish pointer that created the move would be technically this, which that all qualifies in this particular context. See if it holds. Yeah, probably just too consolidated for me, to be honest. We're kind of just chasing consolidation. We're literally, EQ range is not moved up. We're on structural EQ, algo EQ. Like, there's no beating that, right? Either side is kind of doing its own thing. I'm probably going to skip this price action. It's just a little bit too Shoppington for me. Let's actually switch it up. We'll go to a different equity line to see if there's a better setup on the open. Did my camera turn off? Oh, shit. Fuck ass camera, bro. I don't know why it does that. Hopefully it hasn't been off for too long. Is it back? Oh my god. Hold on. I think it showed my fucking lap. That's funny as hell. Not gonna lie. Quick cock shot. Anyways. That's fucking hilarious. So no delivery I care about. We're on gold now. Not that that really matters. Actually, I hate gold. I don't want to do that in gold right now. Man, there's just no good open. I'm going to go through all my equities to see if there's anything that we can look at. Okay, here we go. Here we go. We can analyze this price action based on delivery. Where is our bullish pointer? Where is our bullish and where is our bearish pointer? Okay. That's what I want to ask. Where is it at? Whoops. There we go. So it looks like our bullish pointer is currently sitting at this guy right here. This is our bullish pointer. Now our bearish pointer, it looks to be completely retraced, so we don't have to worry about that. So we want to see order blocks form against that, and we want to see inefficient delivery after this. That's what I want to see happen. There is inefficient delivery. There is our first fair value gap outside of the order block that we're looking at specifically here. We have an order block here as well, but it does not have a bullish pointer I really care about, so no retrace, relatively smooth to the upside. Want to see no bullish pointers being created, kind of a sweep there. A bullish pointer, again, there's another bullish pointer here, so room for entries. Sweep, successful sweep, wait for the retrace. Inefficient delivery, no bearish pointer to worry about though. Besides, whoops, didn't even realize that. There's a bearish pointer here. That is on me, fam. That's actually on me. I didn't see that. Was not paying attention. Relatively inefficient to the downside now. Relatively inefficient. First fair value gap right there. That fair value gap was retraced. We have a volume imbalance now. We'll wait on this fair value gap retrace. Break of structure. I mean, do you see? Do you see the delivery aspect on this? So now we want to see an inversion of that order block, and this should be pretty smooth. EQ range. Are we on any other EQ I got to worry about? Technically we are, or at least close to. Man, we just keep getting stuck in equilibriums here. So technically there is an implied move here. whether or not you realize it or not. Bearish order block, bearish pointer down to EQ. So really, we've already created the implied move. So there's not much squeeze out of that you can really get. But you can see that draw to the downside. You see how, based off of that reaction here, that bearish pointer, that order block, you see I wasn't even paying attention. First fair value gap completely changed the move. Once you broke structure and that bullish pointer was basically over anyways. You see how we kind of followed that move through and through. And there was your EQ range. There was your algo EQ, the structure EQ. There's just too many good things on that. We'll go to the next day. Actually catch an example. Okay, here we are. Just copy these over. Cool. Hopefully the camera wasn't off for too long. You guys were just listening to me yap about nonsense. There we go. Okay, so where's our bullish pointer in this specific example? We don't have a bullish pointer in this specific example. We don't have a bearish pointer in this specific example. The first order block out of the range would be this guy right here. There's no pointer. There's no retrace. There's no nothing I really care about. So I'm going to wait for that. And you're probably like, but you're missing the move. You're missing the move. It's just my strategy, man. It's just my strategy. I'm going to tell you. Unless you got in as a swing, like there's no way you would have been in on this. And I'm just not willing to get cooked, right? The algo is willing to get cooked sometimes, like that. And I ignore a lot of this stuff, right? These longs are actually notifications I get on my phone. Then I go through. I'm like, okay, is this valid? Is this not? I wait for the pointer. Then it takes the entry. It's that simple. Once I confirm it, entry's done. It's relatively 95% automated, which is really nice. I don't have to do anything anymore. But these, you don't got to worry about these. It doesn't mean anything. There's no trade. There's no execution. It's just pinging me like, yo, potential time for some longs. Not that I would agree with it in this instance. No bearish inefficiency and no bearish pointer. Okay? Nothing I care about. Reaction off of volume imbalance, no pointer, no nothing, no inefficiency. This is a bearish pointer that actually looks to be an order block. So we want to see, does that buy side sweep create a move to the downside? The answer is no, creating a bullish pointer. Notice we're creating a lot of these pointers around EQ. That happens. There's a bullish pointer here. And we broke structure over the bearish pointer. We want to see inefficient delivery after this. If we do not see that, the move is probably not going to happen. No bullish pointer, but should be an inefficiency. Inefficiency, there's our price delivery. Our entry should probably happen after this, though. An inversion of this bearish order block, for sure. Unless we find a bearish pointer in here that forms off of the retrace that we take to the downside. It's that simple. Just like that. All right, bullish pointer. Starting to fail. You see how it's starting to fail? So our confidence in the bullish move, unless we create that inefficiency relatively quickly, started to fade, started to dwindle a little bit. Another bullish pointer. Does that pointer move in? Two bullish pointers. Two bullish pointers. Does it really do anything? No. Another bearish pointer. Another bullish pointer. It's just trading back and forth. Highly consolidated, efficient delivery. Efficient delivery. Efficient delivery. Like, it doesn't get any more efficient than this, to be honest. Another bearish pointer, another bearish pointer, two bearish pointers in a row right here. Two bearish pointers, no inefficiency, volume imbalance. There's your inefficiency. Could be the sweep there. And then you see how the move is just... The bullish move was decaying. You saw it in real time. The bullish move was decaying. The bullish move was creating bullish efficiency. What does that mean by bullish efficiency? Is we were expecting a move to the upside, right? This is it working off bias. We were expecting to move to the upside through bullish efficiency. We saw a lot of bullish pointers that were all failing. I'll outline it again. This is actually really solid. We had the first really good example, and then we have two that kind of show you how we use it to deny the setup and take a short off of PDH over a long off PDH. Now take a look, right? Bullish pointer, failed. Bullish pointer, failed. I think we had more than that. It felt like real time. Yeah, bullish pointer, failed. You see 3 instances where the bullish pointer did not create a bullish inefficiency. And now you can see quite clearly that bearish pointer honestly flipped the market, entering the breaking structure, additional breaking structure after the fair value down to EQ range. It's pretty much that simple, and there's your full TP right there. You would not risk it any more than that. Stops would go on the algo EQ. Obviously, you guys don't have it, but still targeting EQ range. If you kept a runner, not sure why you would. That's like, come on, that's just literal greed. And notice we're creating pointers again. But there you go. That's how you read price delivery. Would have made a little bit more money there. The max you could take this to is PDE. That's as far as I would ever take it in any instance ever. But I would be okay with this price delivery. Like down to EQ range, I'm happy with that, right? Because really this is just speculative, right? You could use pointers here. For example, this is what you could do if you want to keep runners or not, if it makes sense. Bearish pointer doesn't create inefficiency. Do you see? Bearish pointer, create inefficiency, and you just run it till it's, you see? Watch, bearish inefficiency. We're still good. Let's say we had held it down, right? For sure out. Just for sure out. Bullish pointer, creating inefficiency, right? So you're for sure out here. On any break of structure against you on a runner, you're getting out of that shit. Like, come on. Anyway, so there you go. Bearish pointers are the beginning of price development to a particular direction. You can see that with our previous example from way before, as well as with this example. We had a bearish pointer all the way up here. That bearish pointer, that bearish efficiency created inefficiencies to the downside, retracing old bullish inefficiencies back down to EQ range, as well as PDE and our algo EQ. It's that simple, okay? Use efficient price delivery to predict stage transformations, market state transformations. It's that simple. Hopefully today was an impactful lesson. Not sure all of you will make it to the end because y'all just don't got that y'all get the fucking nuts on you like that shit. But if you do, comment, I got the nuts on me like that, just so I know who the real ones out there tapping in. All right, boys. Take care. I'm going to be live tonight, so y'all can see me there putting this into practice. Love y'all.